Good morning and welcome back, everyone, to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market, and I'm your host, Kevin Horner, joining you from a beautiful Denver, Colorado, as usual on this fine Wednesday, joined by my friend and fellow coach, Brent Moores. Good morning, Brent. Good to see you. How are things out in Utah today?
Things are nice. Yeah, it's we actually had for all of December, it seemed like it was about October-ish weather, I guess. We finally hit winter here, I guess. So
Yeah.
that's I think a good thing. But it's nice to be here, and I'm glad to be with you today, Kevin.
Well, we're glad to have you. We're going to cover quite a bit today, Brent, obviously, as we usually will on a Wednesday, but we're going to try and expand that to make sure we hit a number of key areas as we discuss not just the markets, but really the macro overall view of what's happening here. We're going to try and assign some semblance of relationships to what we're seeing from some of these movements where we can, as best we can, but really just kind of setting the table here. We've got a few companies have reported earnings. We've got more on deck here, obviously, from the financials this week. So plenty to get to with all of you. Now, this morning in our chat here, we are joined. I'm sorry, everybody, I messed this up, but it looks like we're joined by Connie this morning. So say hey to Connie. She's going to manage chat, get to questions for us that we're unable to get to, but you know we're going to try and keep an eye on things for you there. I see over to you, Brent, 9 thumbs up. We haven't even gotten started. You guys are really optimistic. I love to see it and really appreciate it. That feedback is always welcome, everybody. So make sure you're taking a minute and following all of us on X as well. Brent Moore, CS, Kevin Horner, CS, and Connie Hill, CS. We try to post for you there daily and weekly, and interesting charts, macro information, headlines, etc., just to keep you apprised of what's happening in the market. So a follow there would be great. Now, let's get to our disclosures, and then we'll jump right into things. First, just remember that our discussions are exclusively for your information and your education. We do not make recommendations. We do not make endorsements for a specific approach to trading the market. We do, however, discuss technical analysis. We remind you this is merely one decision point, really. We encourage you to make decisions off a multitude of factors, not just one, and most notably, not to base decisions only on technical analysis. Now, as usual, our top-down methodology will follow for us today. We will hit the biggest of the indices, work our way through sectors that are actually moving around here, try and get some understanding of those, talk some individual equity positions as well that are in the news this morning as we can. But we're going to start out, as we always do, Brent, with our S&P 500. Now, Brent, I was noting yesterday, it's really just been kind of a grind higher here. We have made slightly higher highs, but we're not getting expansive moves to the upside. We're really just grinding in here. What are the detail that you're kind of keeping a close eye on?
So what I would say is I think a grind may not be a bad thing because when it's skyrocketing up, which isn't, I want to describe it that way right now. When it's skyrocketing up, you worry more about kind of bubble, the quicker it goes up, the quicker it may go down. That's not to say it can't go down quickly, but the slow grind up may not be a terrible thing. Now, from a technical standpoint, higher highs, we just hit a all-time high 2 days ago. And we're holding that 20-day moving average. Something else I would say with the S&P 500 is it's interesting when we look at market breadth measures, and there's a lot of different ways to do this. You can look at like new all-time highs on the New York Stock Exchange, for example, or you could look at the percentage of S&P 500 companies above their 50-day moving average. Or you could look at, let's see, the S&P 500 equal weight index. It's been going strong too. And so the thing is, there's not, what we've seen before this is we've seen kind of one's doing well, the equal weight was doing well, but the SPX wasn't doing as well, or vice versa. They're actually both doing pretty well right now. They're both near their all-time highs, and both have been trending up at this point. More market breadth, but even some participation with some of the larger cap stocks too.
It's true. In fact, I was able to go ahead and launch that look at things, Brent. I've got a chart here. I'm going to sling over if it'll let me. And it's got the visual of exactly what you were just speaking to here, our market breadth. So there's our stocks in the S&P over the 200-day, stocks in the S&P over the 50-day. Brent, that 50-day level, that's pretty notable though, isn't it? I mean, we're going to go back to August to find that level of breadth in the S&P.
Yes, and that level right now is 68, 2/3 of stocks essentially are in the S&P 500. So out of the 500 stocks, 2/3 of them are above their 50-day moving average. That's, 50-day moving average is more of an intermediate term trend indicator, I guess, would be that my sense on that. And that's pretty high. I mean, as you look back over the past, this is a year chart.
Yep.
We're right kind of almost about as high as it's been.
Mm-hmm.
And, longer term, the 200-day moving average, same deal. And
Mm-hmm.
so it's that's that's good. That maybe a little less worry perhaps in terms, well, I mean, that's maybe less concerning than if sometimes we get this, just one segment of the market, just, semiconductors and tech are driving strong, or mega cap are driving strong, but the rest of the market is so. That's not the case right now.
Yeah, and I think that's the notable takeaway. We actually, in this class in particular, you and I have covered this a number of times, but you notice the S&P doing this grind thing like we just got done covering, and then you called out the SPX equal weight. I thought that's appropriate to look at. Look at that. That's brand new highs.
Yeah.
So the difference here, Brent, this just has a makeup that looks even stronger. And again, this is likely tied to the fact that we're getting actual movement out of groups that aren't technology. We're going to see a look at technology here momentarily from a sector standpoint, Brent, but this is a strong development for the equal weighted version. Why do traders look at this and maybe use this as some validation of our current market move?
Well, it's because if one sector's driving the market, and then that sector kind of just turns around or whatever, then the whole market is, then the rest of the market shows through, and most of your stocks aren't doing well. And so
Mm-hmm.
it's probably more sustainable and more healthy when we talk about the whole economy and not just, 10 stocks in the economy. When we talk about the whole economy, that's ultimately that's what drives the markets, is economic activity. And we sometimes we get in this kind of stock market bubble, and because we're traders here, that's what we're looking at. We're looking at the stock market, but ultimately, what drives the stock market? The earnings of the underlying companies in that make up the index is of what we're talking about here. And if and now they're not necessarily coincident with one another. Sometimes the market tends to lead and anticipate future earnings and future performance. But ultimately, if the economy is in the tanks and it's just being bad, stocks will reflect that too eventually.
Yeah, that's the thing. And again, it's tough to remember these details. It's why we talk about them, Brent, so frequently. Is just the reminder that the market changes on an annual basis. Sometimes we get back to back years like 24, 25, when it
Yep.
basically feels like the same market, and then we get this year where things are kind of shifting a little bit. It doesn't quite feel the same. Notably, Brent, as I pull up the NASDAQ here, the NASDAQ 100, you'll see that we've got that lid on our market, don't we?
Yes.
Rejected again at around 25,800, 25,800 on the NASDAQ 100 index.
Not at all-time highs, but we have had some strength lately. We're near the end of this kind of ascending triangle here. See if we break out. But all in all, for since November, we've had some strength for the most part. But yeah, there is a little bit of a difference there. More just going back to the more broad-based performance there, but not. I wouldn't say the Nasdaq's terrible. We're not that far off of our highs there off this. And so we'll see from a technical standpoint, Can we maintain that 20-day moving average? Can we continue the process of getting higher highs, or excuse me, higher lows here?
Mhm.
If we do, we're going to end up breaking higher highs. Right now, we've had equal highs,
Right.
and but that's the technical pattern, that ascending triangle, and we'll see if we break above that. Some traders will use that as a technical an entry signal. Some traders, because it's often deemed to be positive if if we break above the horizontal resistance line is what I'm talking
Yep.
about there. If we break above that, some traders would use that as an entry signal.
Yeah, it's really notable because the oval area here kind of stands out as a bit of an island. If I take that oval off, you can kind of see that week-long six-session action kind of stands out to itself, doesn't it? And
Yep.
then since we took that range out with this initial move lower, we've not been able to get a new high from it. So we've had matching highs, letting us know that we are not yet. I mean, we're still holding trend, but we are not yet in continuation of trend mode. The other thing that stands out, Brent, that 50 days starting that gentle slope downward. So price action has kind of waned a little here. Again, this should not be a shock to us, noting the makeup of the NASDAQ 100. It is extensively extensively technology, as we know, not getting the carry that we're seeing in S&P 500 from industrials and financials and healthcare.
Yes, and a lot of this will, we're just entering earnings season, okay?
Mm.
And so earnings can drive corporate earnings individually can drive, can move the market, but for the most part, consider them as a collective of overall how's earnings season doing and whether that's more likely to drive it. But so far, we've just had financials, essentially, mostly
Mhm.
here. But over the next 2-3 weeks, we're going to get more technology type companies and communications type companies. And the fate of those, the earnings that come out on those type companies are more likely to drive the NASDAQ either up or down from there.
Yeah, I think that's a safe comment there, Brent. Let's move on to see what's happening with our small caps here. Small caps off about 1/3%, but had busted out of that range there in the last couple of days. Notable, I drew a horizontal line in at the prior highs, but we could also look at this and say that this got going in earnest when we broke the downtrend line right here.
Yes, and so you said something earlier about, well, actually, I think it was pre-show we were talking about something catching up. Well,
Yeah.
is the rut catching up for underperformance over the past couple of years, really of late? Because they've really they've really outperformed. They've really done so well lately. That was an all-time high on the Russell 2000 yesterday, and
Yep.
this is not one that I would characterize as grinding up. This is one that's just like shooting up and flagging and shooting up, and that's what we've seen right now. So a lot of strength out of that. Well, look at the gap between that and the 20-day moving average. That's huge.
Yeah.
That's how you get that RSI as high, up near the closer to the 70 level, is that really strong performance.
And, I got to point this out. I mean, you're right. Really strong performance. Excellent move in the most recent 2 weeks off of the 50-day moving average test back here. In fact, if I drew the line to the peak there just to get an idea, it's up more than nearly 7% basically in 2 weeks, which is a big move for a big index. We have to point that out. 7% doesn't sound like a lot, but for some indices, Brent, that's an annualized level of
I was
return.
thinking the same thing, Kevin. That could be, yeah. And we're right at the beginning of the year, so like we could just stop the year right now and say, well, it's not a great year at 7%, but not terrible either. And so there you go.
Not terrible at all. I also thought we could peek real briefly here on just a longer term. And if you're looking for reasons in the longer term for reasons to maybe reduce position size and so forth, many traders are going to eyeball that green upsloping line in here. That's my 20-week, I think. moving average. So let me just eliminate some of these other ones real quickly, just make sure. Yep. So look at this, Brent. I mean, we recaptured the 20-week moving average way back in June and have held it since. We had the one quick brief test here in November, and it was quick. Look at that candle that week. We were well below the 20-week, closed on it, and then got a follow-through week, the immediate one thereafter, and it's been more of the same. So if you're a longer-term investor, Brent, this might be a way to monitor the small caps.
Yes, and this is a it's good to have the perspective, and this is kind of what I was getting at earlier, that we kind of had that underperformance in the Russell 2000 for a while, but boy, of late, the last several months, it's just been doing really well. And small caps can be kind of considered a kind of an economic, I don't know, canary in the coal mine, so to speak, in the sense that they're maybe a little bit more vulnerable companies, and the fact that people are buying them shows some confidence in the economy and less concern in the economy. Now, there's still a lot of stuff that can go wrong. We all know that. There's still a lot of risks out there, and we hit those on a day-to-day basis and week-to-week basis. But using the longer-term chart like you did, looking at the broader picture, you can see the overall view there of, just general kind of economic sentiment.
This gets back to a certain extent, Brent, to the question I saw earlier in the chat. It was JR99 asking about fears of a crash, protection of a portfolio. And those are things that we're going to continue to hear about always, because the narrative of the market changes quite frequently. These days, we all tend to be a little bit more online than maybe we ought to be, maybe a little too in tune with what's happening day to day, too much noise in the market. That said, it's why we discuss the trend viewpoint here so much. Trend trading, trend monitoring of the market is very important to understanding maybe the best way to stay invested. That doesn't mean we can deal with it every step of the way. We're going to get some uncomfortable scenarios from time to time. How we choose to manage those is different for all of us as traders. So my encouragement, I'm sure Brent's encouragement, is also to understand what it is that's going to impact your decision making emotionally. We want to remove those emotions from the table as best we can. We want to make decisions based on practical and specific approach with which we have comfort. So trying not to overthink things, also trying not to read too much into narratives, and remembering, Brent, that the market over the long haul goes higher. Those instances of drawdowns, especially those bigger than, say, a standardized 10% retreat, those are very limited in scope. They do not occur frequently. You and I have had that discussion. You get a 5% pullback once or twice a year, but a 10% maybe once every 12 to 18 months sometimes. We got to lean into what the market does the majority of the time, don't we?
That's the general approach of investors, is the thought that historically the markets have gone up. Historically, the stock market as a whole is a positive sum game. The longer you're in, the better, the more chance that you're going to have positive returns. And so you mentioned some of those stats. And I can't remember off the top of my head, but there's been no 20-year period in history where the market has gone down. I think on a rolling 10-year period, there was like one rolling 10-year period, and that was like Great Depression maybe, where the market went down. But and then as you decrease those time frames, not many 5-year periods does it go down, but it does go down occasionally on that through a 5-year period.
Sure.
And each, any 1-year period, it's roughly a 70% chance it's up versus down. But so the longer you hold, the longer you're in the market, the better the chance of you're seeing positive returns. Now, I don't know what the future is going to hold. We talk about, things are looking good in the market. At any time, things could turn on us. Anytime there's news that, by definition, we don't know what's going to happen on news, and things can change on us. But that's why you have the systematic approach that you talked about, where you have clear signals of a clear idea of what you're going to do and when you're going to do it, when you're going to lighten up positions, when you're going to add positions, when you're going to maybe shift allocations. That's one of the nice things about technical analysis is it can give you signals that, objective signals. Hey, it's above its 20-day moving average, above its 100-day moving average, whatever.
Yes.
Above a support level. These are objective signals that you can use to help you so that you take some of the just, I don't know, whim may not be the right word, but emotion or just kind of, I don't know how you're feeling currently out of the equation. And, some of you, I don't know, maybe some people are great at that. I'm not. I think most people aren't great at just going off emotion and trading from that.
I agree. More often than not, Brent, in my experience, when I've based my decision making on emotions, it has rarely worked in my favor. Usually, that's how I've learned. So I'm trying to not make decisions based on emotion, but on the evidence in front of me. Speaking of evidence, Brent, one of those evidentiary pieces as it relates to small caps is the 10-year yield we're looking at right here. The level I've drawn in has been the level I've been monitoring for a while now, 4.2 or 42 on this ledge. This is a level we continue to be pushed back from. We are holding a new upswing a little bit. That notice the 50-day moving average is rising in here with this yield. But Brent, this is still under wraps a little bit and allowing small caps to continue to climb. So I feel like this is something we just need to continue to monitor here.
Yeah, I think that's an important thing. And ultimately, like this morning, we had a PPI report that came out a little soft. So that was a good thing for it. And
Sure.
that will tend to keep rates down. And so, we'll have to see what happens with that. But right now, just from a technical standpoint, not talking about, what can drive rates up higher or lower, but just from a technical standpoint, that's kind of a channel, an area that I think is probably a relatively important one. We've hit up there several times, and so far, small caps seem to be okay with it. I would suspect, and I could be wrong, but if we shoot much above that, you're going to start to see some wear and tear on those small caps, though.
Yeah, would agree with that. That would be headwinds on the small caps. One of the interesting developments moving off of yield here would be to see which of our interest rate sensitive groups, how they're producing and performing here. Of late, the struggle has been in utilities and real estate. But when we find here that we've run into an area of resistance in yield and maybe have the impression that yields are going to stay under wraps, we could witness utilities moving to the upside. And Brent, given what you've seen from utilities and where they reside right now, would that shock you? That seems to be kind of an appropriate relationship between these.
Yes, and those are, and just a reminder to everybody, utilities are an interest rate sensitive industry. They're highly leveraged, so higher rates mean their debt financing is gonna cost more, and they're also kind of this standard kind of high dividend ish type alternative in the market. And if yields are very high elsewhere, it makes them that a little less attractive to look at those higher dividend yield utility companies. And so those are the two major reasons that come to mind when I think of the correlation between utilities and interest rates. But if interest, so there maybe was a little bit of wear on utilities here, but if interest rates stay below the level we just talked about, that would certainly be a tailwind for utilities there.
Yeah, indeed. In fact, the fact that it found the 200-day, you do have a bullish divergence with that last low and the RSI making a higher low. Maybe this is the signal that utility stocks have retreated to an area of longer range support and some who are looking for exposure to this space might consider this an entry point over a longer term portfolio from an allocation standpoint, as an example. So that's one thing for consideration, as are the REITs. The REITs have gotten into a level about halfway up the channel they've traded in here for the last 8-9 months. So this is developing in a positive way as well. Expectation for potentially lower rates could lead to higher returns in the real estate and utility sector. So wanted to make sure we touched on those. We should also, Brent, talk about financials. As you stated, we are hearing from financial companies. We did get earnings out of JP Morgan yesterday. We've heard from Wells Fargo and Citi today. JP Morgan didn't react all that favorably, but the trend is intact here, Brent. And it looks like what's gone on is just simply a quick throwback to the 50-day moving average and the breakout level of the financial sector here.
Yeah, not necessarily. I want to chalk that up and say, hey, we're reversing the trend and it's going to be a downtrend now. Well, let's see how it reacts right now on this. Obviously, we have a big red candle and we've come back down to about that a 50-day moving average. We'll see if we get a bounce here. We have some more financial companies that are coming out, but the quick move down, we'll just have to wait and see how things go. But quick reversal though. I mean, we went RSI 70, which is a very high RSI, down to 42 right now. So that just shows how quick the swing down has been. But kind of a key level. Those were highs that we hit back in September time frame that were kind of right on the edge of here. Jury's still out whether we're going to hold those or not, really.
Yeah, no doubt, still out. But if you're a trader looking at the 50-day as support, you'd have justification for doing so. There's a multitude of, or what we might call a confluence of value there, right? Former highs, now support. 50-day moving average we've been above since November. Got throwback to it. This is a spot where bulls might choose to mount a stand. So if you're looking for exposure to financials from a short-term standpoint, this becomes what some would call a low-risk area. Not low risk because you can't lose, but low risk because if it broke the 50-day to the downside on a closing basis, some would say, that's enough for me to move on. It needs more time, and they would take a quick loss and exit. That's the reasoning, at least. So monitoring that 50-day makes a lot of sense here in financials in the short run. We've also, Brent, had that leadership with industrials of late, continuing that upward swing. The biggest move, though, this week have been two of our defensive groups, and I think that bears watching. Number one, energy. Energy in the midst of a breakout. Let's talk about this because that triangle you see on my chart, Brent, is a fairly long one, and the break here has been significant following the developing situation in Venezuela.
That's a strong. I don't know what to say about that, Kevin. I mean, that's a really strong break. We had the big triangle that you said went up, consolidated just a little bit, and again today to up another couple percent today. Really a market leader here for utilities. Now, it'll be kind of interesting longer term. Yep, that's exactly what it's going to get at, Kevin. You're drawing on the chart. Are we going to break above those longer term highs that we've had, which would be kind of multi-year highs? That we'll have to see. But right now, the momentum's going that way.
Yep. So this is a pretty important level to possibly move through. We'll move off of this momentarily. We want to talk about staples as well, and I will be getting to some symbols relative to many of the ones you guys are all asking about. So give us just a moment, but I wanted to highlight the move in materials is notable as well. Brent writing that not even a 20-day moving average in here. Probably got to shift that to a 10-day with some of this expedient move we've seen over the last couple months now.
Yeah, that's so again, this is why you can use longer term charts here. It gives you the broader picture. If you're using a 6-month chart, and I'm not saying I use 6-month charts all the time, by the way, just to get a closer up view to see the candle. It's a little harder to see individual candles with this and whatnot, but you miss when you're on the shorter term charts some of the broader term perspective on things. So I'd encourage everybody to not just always use a 2-year chart, but to vary between time frames. Similarly, when you go
Yeah.
shorter term, go to intraday chart occasionally, or a 5-day, 5-minute chart, whatever. Um, Switch up your time frames to get different perspectives
Absolutely.
on that.
Yeah, we got to do that. We talk about that quite a bit here in this class. In fact, there was a great question about finding support, and when things break down, if it fell through a certain level, when do you decide to be a buyer? And I thought it was a great question. But if you're a chartist, a technician, you might just lean into those longer range trends, checking out your weekly, 3-year, 5-year, 10-year, even max time frames, and finding the trend lines that have been respected. Sometimes it's as simple as working with the longest trend, and it can be that way. And then that's why we utilize the grids up here, Brent, to navigate through the various time frames.
Yeah.
Checking in on the weekly and everything. It's very important. The last one I threw up here, Brent, was the staples. I had to do it. Look at this move we've seen. Look at those candles. That's 5 of them in a row. That is an unbelievable 5-day move in the staples.
That is like an exponential, huge move here on that. Each one of those candles are like big green candles there.
Yeah.
And now, just like we were saying with energy, I think we're going to be hitting up to some longer term potential highs, longer term territory here, or potential resistance levels.
Mm-hmm.
Are we going to be able to continue above those levels there? We'll have to see on that. But that's short-term momentum's really strong. You can see our SI is actually above 70 right now. That just shows you how strong that move is.
So I'm wondering, Brent, if this is to an extent maybe tied to that fear factor we've heard about, right? This desire to maybe reduce positions relative to technology, and it's giving confidence to move into more value viewpoints. Staples kind of giving us a little bit of that signal, perhaps. And when you look at what tech has done here today, it's finally falling out of favor. We've been in consolidation, but this is starting to resemble a potential for a shift. And it is still in a developing triangle, but we shouldn't be surprised to see tech under pressure while staples are rallying.
Yes, and we see this. This is kind of that cobra pattern sometimes, that little symmetrical triangle type thing. And it's probably not a surprise. I think it's a good point you make there, Kevin, because what happens is, for a while, when tech is strong, people are going, hey, that's the place to be. That's where I'm seeing my returns. It's a big part of the market, obviously. But this is kind of showing, well, in the last few months, tech, not so much there. And
Mm-hmm.
maybe it's we need to get returns elsewhere. And the party may not last forever here with tech. And doesn't mean it's going to be terrible, but it has been kind of lackluster, we'll say. And meanwhile, while tech was rallying so strong, people fled from things like staples.
Yeah.
They're like, well, why be in staples? I may have a little bit to diversify my portfolio, but really the main action was technology and communications and things like that. And so valuation shifted. Staples may have become a little bit undervalued. Tech, obviously, there's overvaluation concerns, and that may be partially responsible for those returns on staples right now.
It may be. And again, Brent, I think if we expanded our conversation briefly to point out some of those familiar names in the technology space, you're going to
Yep.
see that a lot of these charts are similar. I'm going to pick on a couple. Check this out. So just talking about the so-called Mag 7, Netflix has been dramatically underperforming, pretty
Yes,
healthy
for a while.
downtrend here. Now, Apple had done something similar. It is bouncing a little bit, but many traders would tell you that's setting up a potential bear flag. That's not necessarily bullish. Let's look at Microsoft, another of those big ones, trading at similar, if not possibly new lows, maybe the lowest low we've seen since the summer here. What about NVIDIA? Also in the midst of, pulling back, looking a bit more like it's heavy as opposed to opportunistic. There is clearly a shift that is leading us away from the Mag 7, it would seem here, Brent. And I feel like it's important to reference it because this is a development that is in play as we speak. The market is different than it was in 2025.
And it goes to the point, and especially for newer traders, I would say, there's a feeling when things are going well with something that is representative of how it's always going to be. But we all know, I mean, I've been in the market for a lot of years, and I know you have too, Kevin. Instead of saying years, we'll say decades.
Go ahead and age us. Thanks, Brent.
And we've seen it before. There's a lot of strength in a particular sector or industry group in the market. There's nothing lasts forever. At some point, the party's over. And it doesn't mean it won't, strength won't shift again into tech. But right now, it's the old reliable of late, the last few years of just like, hey, put my money in tech and I'm going to make outsized returns. That appears to be changing.
Mm-hmm. Exactly. And we hope that by discussing this in the classes like this, that we're actually making some headway in understanding the various machinations that can occur. Again, the market's going to do what the market's going to do. It's our job to understand which area of the market cycles we might reside in. This, like I say, is a bit of a different year. We'll see how these Mag 7s start to get back, whether they start to get back in gear, but most of them are off of highs by enough of a percentage where some longer range investors might be looking at exposing dollars to some of these bigger names that they haven't had an opportunity to do with in some time, just based on some of these significant moves.
Yeah. And one thing I would just mention in the chat, Rita is saying, are tariff decisions out yet? I don't know. I'm not showing anything across the ticker on that in terms of tariff decisions being out. Mm-hmm. Supposedly, the Supreme Court is looking at the tariffs, and that certainly could impact the market. Obviously, the whole first discussion of tariffs impacted the market a lot last year, about a year ago, or just under a year ago. And, so that certainly is a market moving event, but I checked about 20 seconds ago and I didn't see anything. So.
And honestly, Brent, I think that might be the reasoning behind the climb we've seen in the VIX is the news headline expectation here. If there is a decision that tariffs are entirely unenforceable or something along those lines, it's apt to be a market moving scenario. So I think that's why we're seeing a little bit of a VIX elevation. Brent, we've only got about 7-8 minutes to go, and we need to hit some of the more requested detail here. So I want to do that with everybody. Let's get to some futures stuff. Now, before I do so, I need to remind you that futures and futures options trading, this involves substantial risk. It's not suitable for all of us as investors. Make sure you're familiar with the risk disclosure statement for both futures and options there. We're going to look at some specific futures, but again, not recommendations and not trade-specific detail. Wanted to hit on move in oil, which took out the 50-day, rallied to the 200-day, Brent. That's about a standard move following a breakout, is it not?
That is about a standard move, but you remember, this is a largely, I would think, kind of a geopolitical-driven move here between Iran and Venezuela, mostly Iran probably, but it, some uncertainty there in oil markets, and so. But keep in mind, 60 in the grand scheme of things, $62 a barrel is not that high. And now we're higher than we were. Yeah, we've gone up about 10% or so over the past week. But it's in the context, it was a downward trend. We've shot back up, maybe hitting some resistance here. Moving average, 200-day moving average, and your just a resistance, the expected move there. We'll see where it goes from here, but we could start to see that slow down, I would think.
Yeah, we've basically been $7 rangey here dating back to early October. So, about 3.5 months between that 55 and 62 zone. over 62 would be the development that would change. Yeah, CM, I noticed that too. They threw up my picture from more than a decade ago. Makes a little difference in my visual. I apologize. You got the old guy with you, not the guy that took that picture 10 plus years ago. Let's see if we can look at some of those other important areas you all want to hear about. Gold. Brent just keeps doing what it's doing. Look at that move against the 20-day, kind of pulling away from the 50-day now. Does not appear to be an end in sight. Again, we're not saying that it has to go higher, but if you're watching the trend, you don't have sell exits, sell indications from the trend analysis at this time.
I don't know where it's going to go, but what I will say is, the stocks go up, gold's been going up. When stocks go down, gold's been going up. When the dollar's been going up, gold's been going up. When the dollar's been going down, gold's been going up. So all the correlations you may look for on gold, throw them out the window right now, because again, this is just looking historic. The last couple of years, gold's just been killing it.
It really has. That diagonal break is the one that's notable to me. We've actually been above the 20-day for even longer than that. So strong trend. Many traders will utilize the 20-day. Make note of the tracks we've got here 3 days in a row at 46.50. Kind of taking a pause. It might just be that, just a little bit of a breather. We do have a bit of an RSI divergence, and that might be something that plays out over the course of a few days to a few weeks if it can just settle out. Now, one that's not in settle mode, and one that has no chill whatsoever, is silver. This thing is on a tear. It's up another 5% today. I mean, what are you going to say, Brent? There's just no give back.
It's like there's no give back. And so what we've said about gold, we could say about silver, except just even more so. And so, I mean, the percentage. Look, if you go back, let's see, we're January. If we go back to January of last year, we were in the 30-something range here on this.
Oh my God.
So
yeah.
We're up 3 times.
200% nearly, Brent.
Yeah,
not too shabby.
And there's no let. Yeah, at some point there'll be a let up, but just aren't seeing it now.
Not yet. Don't. Again, you can be a seller at this time. Selling on strength. Nothing wrong with that. Many a trader is a fan of selling into strength and seeing things settle down. It eventually will breathe. You'll probably get something akin to what you got here for that 1 to 2 week window at some point. We don't know when, but that's one way that some traders might manage it. If they want to get that pat on the back, they might do just so after a significant move to the upside. Now, it's not alone in its movement here. The other thing we should make note of, I would think, Brent, would be Bitcoin, which has moved through an area of former resistance. It might now be in a new trend.
Yeah, we've been talking about this kind of channel that we've had in Bitcoin for a few, right there. And that was kind of the key level. Well, as of today, yesterday, we were kind of right on the precipice of it. Today, breaking out. So that, some Bitcoin bulls are back in, and, we'll see where this leads, but this certainly seems like a change in pattern. We were, it was bullish for so long, and then kind of downtrend, kind of caught its footing there, and little sideways pattern breaking out to the upside right now.
Yeah, and given the move, Brent, this is 2 months or so. Yeah, so mid-November to mid-Jan, 2 months, $10,000 range, or 10,000 range here, 85 to 95 approximately, and it might portend upside from 95 up to 105. I'm sure many a trader is going to look at the 200-day moving average at just shy of that 104, 200. That's a reasonable target for anyone believing that we have cleared a level of former resistance, which could then act as new short-run support. I thought that all of that was very pertinent stuff, Brent, making certain to hit on our precious metals, making certain to discuss oil and the potential significant shifts we've seen in some of these very important sectors and spaces. but this move in Bitcoin seems notable because, you know, all the while for the last few months, while Bitcoin's been dropping, we've again noticed that this is a risk on asset. And so it might be a bit of a shift ahead of schedule with the rest of the risk on assets, which have been under pressure. I think it's a very interesting narrative that might be playing out.
It is one for a while, going back a few years, Bitcoin seemed to be totally kind of uncorrelated with the market. Then it started to just act like one of these mega cap tech companies for a little while. That correlation is kind of decoupled here though, and it's kind of doing its own thing of late. And so we'll see if that continues.
And just last chart there, that's the 100-week moving average on Bitcoin on a 5-year window, everybody utilizing a weekly chart. So if you're looking for, this just goes back to that statement I made earlier, Brent, about long-term falling through short-term areas of support. What do we look for next? Consider the long-term chart. You might find support in there somewhere, huh?
Yep, absolutely. So looks like we're about out of time there, Kevin.
Yes, we are. I'm going to thank everybody for joining us. Big thanks to Connie in the chat today. Follow us all on X. We greatly appreciate that. If you like the discussion, hit that thumbs up button down below for us. That'll help us out in the replay once we get this reviewed for all of you. But as always, make sure you're subscribed to the channel. We appreciate you participating and joining. We love hearing from you. So thanks for being here. Have a great rest of your Wednesday, and we look forward to catching up with you again real soon.